All right, let's dive into something you might think is a little, well, dry.
Dry.
Yeah, I'm talking about mortgage fraud. But trust me, this goes way beyond spreadsheets.
Oh, absolutely.
We're talking about dreams, deception, and sometimes massive consequences.
It really is fascinating. Mortgage fraud isn't just about one shady person, you know?
Yeah.
It's a whole spectrum.
A spectrum.
Yeah, from like someone stretching the truth a little to get a loan, all the way to huge schemes with tons of people involved.
So it's more than just like fudging your income on an application.
Way more.
Yeah.
To really get it, we need to start with what mortgage fraud actually is.
Okay, lay it on us.
What-
What is it?
At its heart, it's intentionally deceiving a lender for financial gain. And that deception, it can happen at any point, like even after you close on a house.
Wow, so it's not just a one-time thing.
Nope, not at all. And there are different motives, too.
Motives, like why someone would do this.
Right. Our sources break them down into two main types: fraud for housing and fraud for profit.
Okay, those sound pretty different. What's fraud for housing?
Imagine someone desperate to own a home. They might puff up their income or downplay their debt.
Just to qualify for that loan.
Exactly. It's something a lot of people can relate to, especially with how competitive the housing market is these days.
Yeah, I can see how someone might be tempted to bend the rules a bit.
Of course, we're not saying that's okay.
Not at all. But I get the motivation. So then, how's fraud for profit different?
That one's way more calculated, often involves multiple people working together.
One of our sources mentioned something called equity skimming. Sounded pretty sneaky.
Oh, yeah, that's a classic fraud for profit move.
Someone buys a property, rents it out, but never makes those mortgage payments. Just pocketing the rent.
And leaving the lender with nothing.
Yikes. That's not just hurting some big bank, right?
Right. That kind of thing can actually destabilize the whole housing market. It affects all of us.
Okay, so the why is becoming clearer. But how about the how? What are the actual tricks of the trade?
Oh, there are a bunch.
A whole arsenal, huh?
Pretty much. And understanding them is key to protecting yourself.
Let's start with something basic, like income fraud. I'm picturing someone adding a few zeros to their salary.
Haha, basically. They want to look super financially stable.
To get a bigger loan than they should.
You got it.
Okay, then there's employment fraud.
Oh, yeah, that often goes hand in hand with the income stuff.
So making up job titles, inventing companies.
Maybe even exaggerating how long you've been at your job.
Wow, creating a whole fake persona.
It's wild, and the creativity doesn't stop there. There's also asset fraud,
Asset fraud.
where someone misrepresents their assets, like saying they have more savings than they do.
Or claiming to own property that isn't theirs.
Exactly. Or even forgetting to mention debts they have.
Financial smoke and mirrors.
You said it. And then we have occupancy fraud.
Occupancy fraud. That sounds interesting.
This one's all about pretending you'll live in the property as your main home.
When you really plan to rent it out or use it as a vacation home or something.
Bingo. They're after those sweet owner-occupied loan terms. Clever, but unethical.
Very unethical. All right, what else is there?
Well, how about appraisal fraud? This is where an appraiser gets involved.
So not just the borrower this time.
Right. They intentionally inflate the property's value.
To help someone get a bigger loan.
Exactly. And there's usually a financial incentive for the appraiser.
Makes sense. Then we have something called straw buyer fraud, right?
Ah, yes. That one sounds like a movie.
Someone with great credit acts as a front.
To get a mortgage for someone who wouldn't qualify on their own, it really shows how these schemes can involve a whole network.
Speaking of networks, we talked about equity skimming earlier.
Yeah.
But there's also reverse mortgage fraud, right?
Sadly, yes. This one targets elderly homeowners.
That's awful. What do they do?
They might pressure seniors into these reverse mortgages they don't understand, or even worse, just steal the money.
That's terrible. Preying on vulnerable people like that.
It's truly despicable. And then you can even have situations where someone falsifies property titles.
Falsifies titles.
Yep, basically selling a property they don't even own. And remember, these are just the common ones. Fraudsters are always coming up with new tricks.
It's almost overwhelming to think about.
It is, but knowing about them is the first step to protecting yourself.
Okay, so we've covered the different types of fraud. Now, I'm curious about the who. Is it always just the borrower trying to cheat the system?
It's rarely that simple. It's often a whole cast of characters.
Well, it's not always clear who the bad guy is.
Exactly. And sometimes borrowers might even be victims themselves.
Victims.
Of what? Of predatory lending or schemes run by others. It's not always black and white.
Interesting. So who else is involved in this cast of characters.
Well, sometimes real estate agents play a part. They might inflate property value
Or misrepresent the terms of a sale.
or even help with those appraisal schemes we talked about, all to secure loans for buyers who shouldn't qualify.
It's kind of unsettling to think that even professionals might be involved.
And then there are the appraisers. As we said, they can be persuaded to overvalue properties.
And that just fuels the whole fraudulent loan system.
It does. And then you have mortgage brokers.
They're the ones connecting borrowers with lenders, right?
Right. And sometimes they might falsify applications
Like changing income or asset information.
or misrepresenting loan terms, all to get their commission.
So there are people at every level who might be tempted. I guess it comes down to money, right?
Sadly, yeah, often it does. But here's a real shocker. Even lenders themselves can be involved.
Lenders.
Huh.
Really? I thought they'd be the ones most motivated to prevent fraud.
You'd think so, right? But sometimes they might overlook red flags.
Like if they're incentivized to just approve more loans, even risky ones.
Exactly. It's all about profits for them, too.
This is starting to sound like a real tangled web.
It can be. But the most important thing to remember is that this isn't just some abstract financial crime.
What do you mean?
It has real consequences for real people, individuals, communities, the whole economy.
That's a crucial point. It's easy to lose sight of that. So let's shift gears a bit. Why should our listener care about all of this?
Because it affects us all, even if we're not directly involved in a fraudulent deal.
Okay, so what are the real-world consequences?
Well, first off, there are serious legal penalties. We're talking big fines, prison sentences.
This isn't just a slap on the wrist.
Nope. And then there's the financial fallout. Victims of this fraud can lose a lot of money.
The lenders and investors, you mean?
Right. Lenders might have to write off bad loans. Hurts their profits and their reputation.
And it's not just big institutions that get hurt.
Definitely not. Borrowers caught up in these schemes, their credit scores can get destroyed. They could even lose their homes.
It's heavy stuff. It's not a game.
Not at all. And then there's the impact on society as a whole. Mortgage fraud can contribute to those housing bubbles we see.
Where property values get inflated artificially.
Exactly. And when that bubble bursts, it can trigger a wave of foreclosures, devastate whole communities, even destabilize the entire economy.
It's like a domino effect, starting small and ending in disaster.
It really can be. But the more we know about these schemes and how they work,
The better we can protect ourselves.
right, and advocate for change, too.
That's a good point. We can't just sit back and watch this happen. So what can we do? How do we fight back against something this big?
Well, there are things we can do on an individual level and on a larger scale, too.
Okay, I'm all ears. What's the first step?
One crucial thing is for lenders to get a lot stricter with their verification processes.
You mean really digging into a borrower's financial information?
Exactly. Making sure those pay stubs, bank statements, all of it is legit.
So no more taking people's word for it.
It's about being thorough, but it's not just on lenders, of course.
Who else has a role to play?
Real estate agents, appraisers, anyone involved in the process needs to be educated about fraud.
Like how to spot the warning signs.
Exactly. The more they know, the better equipped they are.
Like giving everyone fraud-detecting goggles.
I like that. And then we can't forget about technology. Data analytics and those fancy systems can help a lot.
To analyze information and flag potential fraud.
Yep. They can spot patterns and red flags that we might miss. It's like having a digital detective on the case.
A digital detective, I like that. But technology isn't perfect, is it?
You're right. It's not a magic solution.
We still need human judgment and ethical practices in the industry, and good regulations too.
Absolutely. It's a team effort.
So it's not just about relying on algorithms.
Right. We all have a part to play, even individuals like you.
What can regular people do?
Knowledge is your best defense. The more you understand about mortgage fraud, the better you can protect yourself.
So learn about the red flags, the different types of fraud.
And the steps you can take to minimize your risk.
Be informed and proactive.
Exactly. Don't be afraid to ask questions. Do your research, and if something feels off, get a second opinion.
Trust your gut.
And don't underestimate the power of documentation. Keep records of all your financial stuff, communications with lenders, agreements, everything.
Like a paper trail.
Exactly. It can protect you if something goes wrong.
Good advice. So we should be informed, be cautious, and document everything.
And remember, if a deal seems too good to be true, it probably is.
That's a good rule for life in general.
You got it. Be wary of those promises of guaranteed loans or super low interest rates. And don't let anyone pressure you into signing something you don't understand.
Trust your instincts.
Always. And if you do see something suspicious, don't hesitate to report it.
Like if a property value seems way too high or the documents don't add up.
Exactly. Speaking up can protect you and others from becoming victims.
We all have a responsibility to help keep the housing market honest. This has been eye-opening, to say the least. We've really uncovered the dark side of the housing market.
It's been a fascinating journey for sure, and I think we've given our listeners a lot to think about.
Before we wrap up this part, I want to circle back to technology. You mentioned it's a double-edged sword when it comes to fraud.
It is. On one hand, it's made the whole mortgage process so much easier, faster, more efficient, more accessible.
We could do so much online now.
Right. But that ease of access can also create vulnerabilities. Fraudsters can exploit them.
Like a race between technology making things easier for the good guys and the bad guys.
You could say that. Think about things like synthetic identity theft, for example.
I've heard about that, but it sounds like something out of a movie.
It does, but it's a real threat. Criminals create totally fake identities using bits and pieces of real data.
Wow. And that's just one example of how technology can be used for fraud.
Exactly.
So how do we stay ahead of the curve?
We have to anticipate the tactics they might use and develop safeguards that can detect and prevent them.
Are there any promising developments in that area?
Oh, definitely. Things like artificial intelligence and machine learning are getting really good at this.
AI and machine learning.
Yep. They can analyze huge amounts of data, find patterns, and flag potential fraud in real time, way faster and more accurately than humans can.
It's like having a superpowered fraud detection system, always watching.
That's a great way to put it. And the more data these systems have, the better they get.
That's encouraging.
Yeah.
It seems like we might actually be able to outsmart the fraudsters.
I think so too. But it can't just be about technology. We need human intelligence, ethical practices, and strong regulations too. It's a multi-pronged approach.
So it's like a three-legged stool. Technology, ethics, and regulation.
Perfect analogy. And ultimately, it comes down to shared responsibility. We all have to play our part.
So what are the most important things our listeners should take away from all of this? What should they remember about mortgage fraud?
Well, first and foremost, it's a huge issue. Mortgage fraud, I mean.
Huge in what sense?
It can have devastating consequences, and
Yeah.
not just for individuals.
You mean for communities, the economy?
Exactly. We have to remember this isn't just some victimless crime, It affects real people's lives.
It's easy to forget that when we're talking about finances. It all feels so abstract sometimes. But there's a human cost.
Absolutely. And as we've been discussing, it takes many forms, from small-time stuff to these elaborate, organized schemes.
So it's crucial to recognize the signs, understand the why, the how, the who, and the potential consequences too.
Exactly. That's how you protect yourself.
We talked about prevention and protection. But it seems like things are always changing, right? Technology evolves, and so do the methods used by these fraudsters.
That's true. The digital age has made things a lot easier, but it's also created new vulnerabilities.
So how do we stay ahead of the game?
Education is key. Stay informed about the latest trends, new schemes, new red flags.
So we can't just ignore it and hope for the best.
Right. Stay curious, keep learning, and be proactive about your own financial safety.
Knowledge is power.
Exactly. The more you know, the better equipped you are.
We've discussed the different players involved, like lenders, agents, appraisers. But what about personal responsibility? What can individuals do to protect themselves?
Well, be very careful with your personal information.
Things like our social security numbers, bank statements, that sort of thing.
Right. That information can be used to create fake identities or mess up your credit. Don't share it lightly, especially online.
It's like protecting the keys to your financial castle.
I like that. And during the mortgage process, don't be afraid to ask questions.
If something's unclear or doesn't make sense,
Get clarification. And if a deal seems too good to be true,
it probably is.
9 times out of 10, trust your gut and don't be afraid to walk away if something feels wrong.
Don't let anyone pressure you into something you're not comfortable with.
Exactly. And don't hesitate to get advice from reliable sources.
Are there any organizations you recommend?
Absolutely. The Consumer Financial Protection Bureau, the Federal Trade Commission, they offer tons of resources and support to help people navigate the mortgage world safely.
Those are good ones to know. So as we wrap up, what's the one big thing you want our listeners to remember?
In this whole complex world of mortgage fraud, the most important thing is to be vigilant.
Vigilant.
Yes, stay informed, be proactive, and trust your instincts.
If something feels off, it probably is.
Exactly. And by working together, educating ourselves, pushing for change, we can make the housing market safer for everyone.
Well said. This deep dive has really been eye-opening.
It has. We've exposed the vulnerabilities and hopefully given our listeners the tools they need to protect themselves.
I hope it sparked their curiosity too. Mortgage fraud is a complex issue, and there's always more to learn.
Absolutely.
Thanks for joining us on this journey. And remember, stay curious, stay informed, and keep those deep dives going.
Well, mortgage fraud is a big deal.
It is. It's been a wild ride exploring all the different aspects of it.
Yeah, it's been fascinating, but also kind of scary.
Scary in what sense?
Just the impact it can have, not just on individuals, but on everyone.
So as we wrap up this deep dive, what are the key takeaways you want our listeners to remember?
The main thing is mortgage fraud is everywhere.
And it can have devastating effects.
Exactly. It's not just a victimless crime. People's lives are turned upside down by these schemes.
That's a good reminder. It's easy to forget that when we're talking about numbers and finances.
It's easy to get lost in the technical stuff, but at the end of the day, real people are getting hurt.
Right. And we've learned that it can take so many forms, from individuals fudging a few things to these massive organized operations.
Exactly. So recognizing the signs, understanding the motivations, knowing the consequences, all of that is crucial for protecting yourself.
Speaking of protection, things are changing so fast, especially with technology.
That's true. The digital age has made things easier for everyone, including the fraudsters.
So how do we keep up? How do we protect ourselves in this ever-changing world?
Never stop learning. Stay informed about new trends, new schemes, new red flags.
Don't be complacent.
Exactly. Be proactive. Knowledge really is power in this situation.
The more you know, the better you can protect yourself.
Exactly.
We've talked a lot about the roles of different people involved in mortgages, the lenders, agents, appraisers. But what about personal responsibility? What can individuals do to protect themselves?
Be super careful with your personal information, your social security number, financial documents, all that sensitive stuff. Guard it closely,
Especially online.
especially online. And when you're going through the mortgage process, don't be afraid to ask questions.
If something doesn't seem right, or you don't understand something,
Speak up. If a deal seems too good to be true, it probably is.
trust your gut.
Always trust your gut.
Yeah.
And don't be afraid to walk away from a deal that feels shady. There are plenty of resources out there to help you navigate this process safely.
Like those organizations you mentioned earlier.
Right. The Consumer Financial Protection Bureau, the Federal Trade Commission, they have tons of information and support. Use them.
Those are great resources. So, as we wrap up this deep dive, what's the one big message you want to leave our listeners with?
Be vigilant, stay informed, be proactive, and trust your instincts. We can make the housing market a safer place, but it takes all of us working together.
Well said. It's been an incredible journey exploring the world of mortgage fraud.
It has.
We've uncovered some dark truths, but hopefully, we've also empowered our listeners to protect themselves.
That's the goal.
Thank you for joining us on this deep dive. And until next time, stay curious, stay informed, and keep asking questions.